A limited liability company, LLC, is a popular business structure that combines the limited liability protection of a corporation with the pass-through taxation of a partnership or sole proprietorship. LLCs offer flexibility, simplicity, and protection for owners' personal assets, making them an attractive option for entrepreneurs and small business owners. Forming an LLC involves several key steps and considerations. Here's how to establish an LLC. Choose a business name. Select a unique business name that complies with state regulations and accurately reflects the nature of the LLC. File articles of organization. Prepare and file articles of organization with the Secretary of State or other appropriate state agency. This document officially establishes the LLC and outlines basic information such as the LLC's name, address, purpose, and management structure. Draft an operating agreement. While not required in all states, an operating agreement is a recommended document that outlines the rights, responsibilities, and operating procedures of the LLC. It typically addresses key issues such as ownership interests, management structure, profit sharing, and dispute resolution. Obtain necessary permits and licenses. Depending on the nature of the business and its location, LLCs may need to obtain federal, state, or local permits or licenses to operate legally. One of the key advantages of an LLC is its flexible tax treatment. Here's how LLCs are taxed. Pass-through taxation. By default, LLCs are treated as pass-through entities for tax purposes, meaning that business income and losses are passed through to the owners and reported on their individual tax returns. Option for corporate taxation. Alternatively, LLCs can choose to be taxed as a corporation by filing Form 8832, Entity Classification Election, with the IRS. This option may be beneficial in certain circumstances, such as retaining earnings within the business or taking advantage of corporate tax rates. Self-employment taxes. Owners of LLCs are generally subject to self-employment taxes on their share of the LLC's income, similar to sole proprietors and partners. LLCs offer limited liability protection for their owners, meaning that owners' personal assets are generally protected from business debts and liabilities. Here's what you need to know about liability protection in an LLC. Separate legal entity. An LLC is considered a separate legal entity from its owners, meaning that the LLC's debts and legal obligations are distinct from those of its owners. Personal asset protection. In most cases, owners of an LLC are not personally liable for the debts and obligations of the business. This means that creditors generally cannot pursue owners' personal assets to satisfy business debts, except in cases of fraud or misconduct. LLCs offer flexibility in management and governance, allowing owners to structure the business to suit their needs and preferences. Here are some key aspects of LLC management. Member-managed versus manager-managed. LLCs can be either member-managed, where all owners, members, participate in the management of the business, or manager-managed, where management responsibilities are delegated to one or more appointed managers. Operating agreement. An operating agreement is a crucial document that outlines the rights, responsibilities, and operating procedures of the LLC. It typically addresses key issues such as ownership interests, management structure, decision-making authority, and dispute resolution.